So it's not all bad. It's not all doom and gloom across my space. And I do have probably half and half beats and misses across this half reporting. But I really wanted to draw your attention to where we saw some downside risk, because I think there's opportunities. Now, I say, don't get me wrong, not all bearish, but when you look for the sells in the CSLs, the sells in the Cochlears, the sells in the ResMed and Ramsay's, you want to look for those as opportunities to take positions, because these are good quality names. The hiccups we're seeing in all those names are short term. I can't emphasize that enough. These are not structural changes to any of these names. However, the timing is critical, like any investment. And I think with the rollout of the vaccines, what you're seeing is a lot of stumbles happening, a lot of distribution concerns. The variants are coming up, so there's a lot more concerns. Now, people believe that this year we're going to flip back. I'm a little more hesitant and thinking it's going to take a little bit longer. But anyway, let me just talk about these companies, a couple of names real quick. We can open up to Q&A. ResMed, obviously, I said in the beginning, shot the lights out on Friday, their Q2 result. That's a 7th consecutive beat for them. But I highlighted in this slide the downside risk going into that result, because what you have is a transitioning from their ventilator sales, which is not their core business, and hospital ventilators for the pandemic, to their core business of sleep apnea products. Now, you did see in this last quarter past that their ventilator sales for COVID were negligible, so as we expected. And you did see a little bit of uptick in their core sleep apnea product lines, which we expected, but still below pre-pandemic levels. So I think the next 6 months for ResMed are going to be quite challenging. You're cycling very hard comps as the ventilator sales are rolling off, as I pointed out. They have some seasonality in their business. So this quarter, Q3, is going to be a nice, headwind for them. And the stock has responded as you'd expect. It has sold off. Now, I think now, on the longer term thematic, I think they're in a sweet spot. Nothing's changed with that. So I kept my buy rating on the shares. I think there's still a quality name because it's respiratory care. It's out of the hospital. It's in the home. And if anything, the pandemic has showed us that you do not want to go to the hospital systems. I mean, everyone's trying to go in their homes and be treated in their homes and lower the cost of care. And they're in that little sweet spot with their software systems. So where do I like ResMed? I'm still a buy rating, as I said, but I would almost be advising to trim positions, maybe take a little bit off the table. At $26, I'll be hitting it hard for ResMed. CSL, everyone wants to know about, obviously, arguably the top of the pops here, arguably a core portfolio holding for anyone across this network. But as I said, unfortunately, the pandemic has been more of a headwind than of a tailwind. I talked about the University of Queensland's vaccine going south on them. That was probably the biggest upside I saw in the vaccine business for them. And unfortunately, the plasma business, that's their core business, 60% of their profit is derived from plasma, and you need raw material. That raw material comes out of donors in the States going to collection centers. Now with COVID obviously happening in the States, you see the infection numbers. They've come down of late, but they're still quite elevated. So you're going to have more headwinds, more risk for CSL. That's the way it goes. They can't collect their raw material, and then you have the Biden administration throwing in more relief. So you have the Robinhood traders in their parents' basement spending up, buying AMC, buying GameStop, and away we go. They're not buying CSL. So it's a problem for CSL. So you have weakness in that stock. However, it's a good quality name. It's a short-term hiccup as far as their plasma. When does it revert, right? This is a key question, and that's hard to know. I think there's downside risk, as I said before, to fiscal 22 estimates. And I'll even go far today to say I think there's risk to 23 estimates because given, as I said, the rollout of the vaccines hasn't been as smooth as you would expect. Distribution is more problematic, and getting everyone vaccinated is going to be not what people believe. And I think I want to point out that people don't realize in the trials, it wasn't to lower your infection or transmissibility of the virus. The vaccine was to lower the severity of the infection. So just because you're vaccinated doesn't necessarily mean you can't be contagious. So how does it end the pandemic? Happy to take that question offline. So for CSL, yeah, what do you do? As I said, I'm sounding like a broken record. 270 is where I'm a buyer. Yes, it bounced off that. I'm splitting hairs. I'll pick some up. Dollar cost average on this thing. It's a good quality name. It's not going away. Quickly on Cochlear. Cochlear is another one. Obviously, comes up. Cochlear implantation volumes. Volume implantation. Volumes are recovering in multiple geographies. That was the last update we had, which is good to see, as well as in China, which is about 15% of their market. But it varies widely across geographies. And the key thing for the second half outlook is going to be challenged. I don't see how it could not be, given a big chunk of this business comes out of the Northern Hemisphere. And as I just pointed out in the US, the infection rates are come down, but are still quite elevated. And you have expectations for one of its key competitors to launch some new products. So you're going to have some headwinds as far as its market share. So I'm looking for some market share, possibly losses for Cochlear. Now it's a market darling. It's bumped off our 180 kind of line in the sand. We're moving to 200. I think right now there's no fiscal 21 guidance, which I've always said, haha, is deafening. We need to know where the company is going. I think cochlear implantation is the last surgical procedure that comes back in this pandemic. So I think there's more headwinds for Cochlear, but it's a good quality name, not going away. It's just a short-term hiccup. Like I said, I'll be looking to pick that closer to 180. Lastly, I'll talk about Ramsay because people bring it up quite a bit to me. The Q1 update was a little bit mixed. There's signs of recovery as you would expect domestically. This was outside Victoria when Victoria was going through its concerns, but since that's right side, you expect the domestic business to pick up, should be pretty solid. However, 40% of this business is offshore, 40%. And those geographies are not doing too crash hot. So there's no really fiscal details released for those geographies. You're gonna get the first kind of heads up on this reporting season. But like I said, the first half result pass is irrelevant to me. It's what's going forward. And I think there's more risk for Ramsay. It is washing its face with some of the government programs it has inked with these in its geographies to kind of just have the spare capacity for any COVID patients. So that's good, but it's not growing. It's not making a profit. It's barely keeping it above water. And then you throw in all the added costs that every business now through the pandemic has had to incur with COVID being COVID safe, and it's just a lot of moving parts for Ramsay right now. And don't forget the psychological headwinds. When do patients really flood back into the hospital systems? Yes, you do need knee replacements. Yes, you can't live in pain. I get it, but there's pent-up demand, and then there's ongoing demand, and it's unknown right now or uncertain as far as the psychological impact we've seen throughout this whole pandemic when this really is going to recover. So as I chirp on too much, I like the stock. However, closer to 55 is where I'm picking it up. I'm not going to pick it up here. I think you just a little more downside risk.